Ever feel like the world's moving so fast you can barely keep up?
Yeah,
Like trying to stay on top of the latest business trends is a full-time job.
it really can be.
Yeah. And that's why we're here, doing these deep dives, going behind the headlines, so you don't have to.
Exactly.
Today we're tackling Zomato,
Zomato. Interesting.
a company that's serving up a lot more than takeout these days.
Right. What's fascinating is how much they've evolved. Like, we all used to think of Zomato as just the food delivery app,
Yeah,
but they're making some really bold moves into new territory.
totally. This whole quick commerce thing, like groceries at your door in minutes,
That's the one.
kind of mind-blowing.
Absolutely.
We've been digging through Zomato's latest reports and financial data,
All the buzz.
and there's a lot to unpack.
Oh, yeah. We're here to break it all down for you. Everything you need to know about Zomato's expansion plans, their strategies.
Right, and whether they're on track for success or setting themselves up for a gamble, a risky gamble.
Could be both.
If you find this deep dive into Zomato helpful, please like and subscribe to this channel,
We break down complex companies.
helping you make informed investment decisions.
Exactly.
Okay, so first things first. What are Zomato's core businesses? They're not just about delivering your favorite curry anymore.
Nope. Not anymore. They've got 3 main branches. Classic food delivery, of course. Still their bread and butter.
Right.
Then you've got dining out,
Okay.
which is more like restaurant discovery, reservations, maybe even snagging a deal on a fancy meal.
I see.
But the real headliner, the one making all the waves, is their quick commerce venture, Blinkit.
Blinkit. Yeah, the name says it all.
Right.
They're aiming for like lightning fast delivery,
They are.
and their growth has been, well, pretty blinking impressive.
You could say that again.
Over 120% growth year on year.
It's not just moving fast,
That's teleporting.
practically. They're planning to have 2,000.
2,000
Yes, 2,000 of these so-called dark stores.
dark stores.
By the end of 2026. Basically like mini warehouses,
Okay.
strategically placed all over cities, ready to dispatch your order like the second you hit buy.
So they're going all in on speed and convenience. But here's the question every investor is asking, and I bet you are too.
Yeah.
Is it actually profitable? Can you really make money delivering a bag of chips and a soda in like 10 minutes?
That is the million-dollar question. And honestly, it's a bit of a puzzle right now. Blinkit's growing like crazy.
Yeah, we established that.
But it's not making Zomato money yet.
Mm.
They're aiming for a 5%
4 to 5%.
adjusted EBITDA margin.
Okay. And for those of us who don't speak fluent finance, what
Yep.
does that even mean?
Sure. Think of it this way. It's a measure of how much profit they're making from their operations before you factor in things like interest taxes, some of that accounting stuff.
Right.
That 4 to 5% is their target, basically to show that Blinkit can stand on its own 2 feet financially, not just burning through cash while it grows.
So investors want to see a path to profitability,
Right.
not just rapid expansion that could just fizzle out.
Exactly. And to get there, Zomato's focusing their efforts on India's top 8 cities.
Okay.
It's a calculated move, targeting the areas with the highest density of potential customers.
Makes sense. But wouldn't that limit their growth potential in the long run?
Possibly, but they're likely betting they can dominate these key cities first, then use that success as a springboard for further expansion later. It's a common strategy, but it's definitely a gamble.
It's a high-stakes game for sure. But they're not just focused on conquering those cities with Blinkit, right?
Right.
They've got this whole other venture in the works too, the District app. What's that about?
District is interesting. They're trying to combine dining out, so like restaurant reservations, reviews, maybe even special offers, with entertainment ticketing.
Oh, wow.
So they want to be your one-stop shop for a night out, whether it's a fancy dinner or a concert.
That sounds ambitious. But also a bit like they're spreading themselves thin. Are they trying to do too much at once?
Yeah, it's a valid concern. It's a bold move to try and integrate those 2 worlds, and it remains to be seen if they can pull it off. But one thing's for sure, Zomato's not afraid to think big. Which brings us to another big development, their potential capital raise.
Oh, yeah, the billion-dollar question. Literally, they're considering raising up to $1 billion in capital.
$1 billion.
I know these companies throw around big numbers, but even to me, that's a lot of money. Why do they need that kind of cash?
Well, there are a few possible reasons. First, remember that intense competition we were just talking about? They need fuel to stay in that race, to keep expanding and innovating.
Right, because standing still in this industry is basically moving backwards.
100%. And don't forget, they're already paying taxes on their treasury income. Might not be long before they have to pay on operating income, too. So having that extra financial cushion could be crucial.
Yeah. Okay, so we've got this picture of Zomato. Ambitious growth, a foray into quick commerce with Blinkit, this district app trying to blend dining and entertainment, and potentially a billion-dollar capital raise on the horizon. It's a lot to digest.
It is.
Where do we even begin to make sense of all this?
Well, if we connect all these dots, it paints a picture of a company at a crossroads.
Okay.
They're making bold bets, taking calculated risks, but the big question is, are they setting themselves up for dominance?
Right.
Or are they playing a risky game that could backfire?
That's the cliffhanger. And that's exactly what we'll dive into after a quick message. We'll analyze Zomato's financials, dissect their strategy, and explore what this all means for potential investors. Stick with us. It's about to get even more interesting.
Oh, yeah, says Zomato, certainly keeping us on our toes. Before we get too deep into those future prospects, though, let's take a closer look at their financial performance. See if the numbers back up their ambitious plans.
Right. Yeah, let's get down to brass tacks. What's the financial picture looking like right now?
Well, their latest report shows a bit of a mixed bag. Not surprising given their rapid expansion. Like we mentioned earlier, Blinkit is the star, in terms of growth, that is, clocking in at over 120% year on year.
Right.
But all that impressive growth is coming at a cost because Blinkit isn't profitable yet.
So it's like the classic high-growth, high-burn scenario.
Yeah.
Racing to capture market share, but can they actually turn a profit while they're sprinting?
That is the million-dollar question.
Yeah.
And it's exactly what Zomato's management is trying to address. They've stated their belief that Blinkit can achieve a 4 to 5% adjusted EBITDA margin,
Okay.
which would signal a path to profitability. But whether they can hit that target well, that remains to be seen.
So what are some of the key strategies they're using to try and reach that goal? Are they just crossing their fingers and hoping for the best, or is there an actual plan?
Definitely not just hoping for the best. They're very laser focused on optimizing those dark stores. Remember those? The mini warehouses placed strategically for ultra fast deliveries. They're constantly refining their network, trying to find that sweet spot, between having enough coverage to reach customers quickly and also keeping costs down.
So it's all about efficiency.
Yeah.
The faster and more efficiently they can deliver, the lower their costs.
Right.
The better their chances of making a profit.
Absolutely. It's a logistical puzzle, and they're using data and technology to try to solve it. They're also working on increasing the average order value.
Okay.
The idea being if they can get customers to order more items per delivery,
Right.
they can make more money with each trip.
So it's not just about speed, it's about making each delivery count.
You got it.
That makes sense.
Yeah.
But what about their original bread and butter, the food delivery business?
Yeah,
Is that still holding strong with all this focus on quick commerce?
absolutely. Zomato's food delivery is still their main revenue generator, and they're projecting over 20% growth in that segment over the next few years.
Wow, that's impressive, especially with all the talk about, economic headwinds and the potential slowdown.
Yeah.
Seems like they're defying gravity a bit.
It's a fascinating observation, isn't it? Zomato's management has said they haven't seen any significant impact from the economic uncertainty yet. Maybe it speaks to the resilience of the food delivery market, or maybe it's just a matter of time before those effects trickle down.
Yeah, that's definitely something worth watching. But for now, it seems like they're weathering the storm pretty well.
Yeah.
So we've got fast-growing quick commerce, steady food delivery, and this intriguing district app on the horizon. Sounds like a recipe for success, but let's be honest, we can't ignore the elephant in the room. Competition.
Oh, yeah.
Everybody wants a piece of this quick commerce pie.
Everyone. It's a crowded market. And Zomato's competitors are just as hungry for growth, maybe even hungrier.
Right.
They're all vying for the same pool of customers, pouring resources into expansion marketing.
So how does Zomato stand out in this battle for dominance? What's their secret sauce?
Well, their strong brand recognition and loyal customer base are definitely assets. But their competitors have those too, to varying degrees. One potential differentiator could be their laser focus on those top 8 Indian cities.
Right, we talked about that earlier.
Yeah.
But I'm still not entirely convinced.
Yeah.
Is that really a winning strategy, or could it backfire?
It's high risk, high reward. By concentrating their efforts on those key cities, they're aiming to achieve a level of density and efficiency that's harder to replicate in more spread out markets.
Yeah.
They're trying to build an unbreakable network in those areas, become like the go-to choice for consumers.
So they're not just trying to win, they're trying to dominate those specific markets.
Exactly. It's a bold gamble, and it could pay off handsomely if they can execute it flawlessly.
If.
Of course, there's also the matter of that potential billion-dollar capital
Right,
raise.
yeah, let's talk about that.
Hmm.
$1 billion is a staggering sum of money. What's the plan for all that cash? Are they just going to go on a shopping spree?
Not entirely clear yet how they would allocate those funds if they do decide to go ahead with the raise. But it's safe to assume a significant portion would go towards fueling the continued expansion of Blinkit.
Right. Those dark stores don't build themselves. And I imagine the technology and logistics behind all this is pretty complex and expensive.
Very much so. They also need to keep investing in marketing to stay top of mind with consumers. And let's not forget about talent acquisition. They need the best and the brightest to keep this machine running. This
Yeah.
industry is all about staying ahead of the curve, and that requires constant investment.
Right, they can't afford to rest on their laurels.
Nope.
But $1 billion, that's a huge bet. Makes me wonder, are they being overly ambitious? Could this be a case of biting off more than they can chew?
That's the question a lot of people are asking. But it does suggest that Zomato's thinking big, thinking long term. They're not just trying to win the quick commerce battle today. They're aiming for market dominance in the years to come.
It's a fascinating case study, that's for sure.
It is.
Ambitious growth plans, a potential billion-dollar capital raise, and a whole lot of competition nipping at their heels. So what's the bottom line for investors? Should they be jumping on the Zomato bandwagon or proceeding with caution?
That's the million-dollar question. And as always, it depends on your individual risk tolerance and investment goals. Zomato is a company with enormous potential, but they're also facing some very real significant challenges.
So it sounds like a bit of a tightrope walk, trying to balance rapid growth with profitability, all while fending off fierce competition.
You nailed it. And that's why it's so crucial to do your own research. Understand the risks and potential rewards before making any investment decisions. Don't just take our word for it.
If you find this deep dive into Zomato helpful, please like and subscribe to this channel,
We break down complex companies.
helping you make informed investment decisions. Now let's shift gears a bit. Talk about the bigger picture. Is quick commerce just a passing fad? Or is it the future of how we shop and consume? And what does that mean for Zomato's long-term prospect?
Good question.
We'll tackle those head-on when we return. So we've spent this episode unpacking Zomato's present, but now it's time to look ahead. Is quick commerce just a flash in the pan? Or is this a sign of things to come? And where does Zomato fit into this rapidly evolving landscape?
Right. Big questions. No magic crystal ball, of course.
Of course.
But we can look at the trends, the data, and make some educated guesses about where this is all heading.
Okay, so let's put on our futurist hats for a minute. What are some of the factors that suggest quick commerce might actually have staying power?
Well, one of the most compelling arguments is this undeniable shift in consumer behavior. People are busier than ever. Convenience is king.
It's true.
We've all gotten used to the instant gratification of ordering something online and having it show up at our door a day or two later. Quick commerce just takes that a step further.
Right.
It taps into our desire for speed and ease.
Yeah, we've become a society of, I want it now, consumers. And I'm just as guilty as anyone.
Aren't we all?
But is that desire for instant gratification enough to sustain a whole industry?
Well, it's certainly a powerful driving force. And it's not just about impatience. For some people, especially in those dense urban areas, quick commerce is a lifeline. They might not have a car or easy access to grocery stores,
Yeah.
or they might have limited mobility. So having essentials delivered quickly can be a game changer.
So there's a real need there,
Yeah.
not just a desire for convenience. But even with that need, we can't ignore the challenges Zomato faces. Competition is fierce. The profitability question is still looming, and there's some ethical concerns to consider as well.
100%. Let's start with competition. Quick commerce space is getting crowded,
Yeah.
and it's only going to get more intense in the coming years. We're already seeing some consolidation, smaller players getting acquired or just squeezed out. Only the strongest and most adaptable will survive.
Survival of the fittest.
Oh,
So what does Zomato need to do to make sure they're one of the companies left standing when the dust settles?
keep innovating, optimizing their operations, and find ways to stand out from the crowd. It's not enough to just be fast. They need to be smart, efficient, offer something unique to customers.
And let's not forget about that profitability hurdle. Can they really make money delivering groceries in 10 minutes? The margins seem razor thin.
It's the billion-dollar question, and there's no easy answer. They'll need to keep refining their logistics, finding ways to increase that average order value, and potentially exploring other revenue streams. It's a complex equation. They'll need to be creative to crack it.
Sounds like you're walking a tightrope. But if they can manage to stay balanced, the rewards could be huge. But let's zoom out a bit more. What about the bigger implications of quick commerce? What does this all mean for our cities, our environment, the future of work?
Right, right. That's where things get really interesting. Quick commerce is part of this much larger conversation about the future of urban life. On one hand, it offers incredible convenience and accessibility, but on the other, we need to consider the potential downsides: increased traffic congestion, noise pollution, the environmental impact of all those delivery vehicles.
Right, and what about jobs? As automation plays a bigger role in the delivery chain, could we see job losses in the retail and logistics sectors?
Potentially. As with any technological disruption, there will likely be some jobs lost. But there's also the potential for new job creation. In areas like software development, data analysis, even delivery fleet management, the key will be managing this transition in a way that benefits everyone.
So quick commerce, it's been a double-edged sword. Amazing possibilities, but some serious challenges we need to address.
For sure.
It's a lot to think about.
It is. And that's why it's so important to have these conversations, to analyze the trends, consider the potential consequences. There's no easy solution, but by being informed and engaged, we can help shape the future of this industry in a way that benefits everyone.
Absolutely. So as we wrap up our deep dive into Zomato, what are some key takeaways for our listeners?
Here's what stands out to me. Zomato is at the forefront of a rapidly evolving industry. They're making big, bold moves. But they're also facing intense competition and some very real challenges. Quick commerce itself is a fascinating phenomenon, potential to reshape how we live and consume, but it raises some really important questions about sustainability, ethics, the future of work.
It's a complex, dynamic landscape. Going to be fascinating to watch how it all unfolds. Whether you're a potential investor, a consumer, or just someone who's curious about the world around us, Zomato's journey offers some really valuable insights into the forces shaping our future.
Want to stay ahead of the curve with insightful deep dives like this one on Zomato? Don't forget to like and subscribe to this channel for more informed investment insights.
And remember, the future isn't something that just happens to us. It's something we create.
Right.
So stay informed, stay engaged, and keep asking those big questions.
Thanks for joining us on the deep dive. Until next time, keep exploring.